Sales of new homes in the United States plunged to the lowest level on record in May that stretches all the way back to 1963. Let's talk about it with Terry Loebs in our Boston newsroom. He leads the property data analytics group at Macromarkets. The firm released its widely watched monthly survey today, finding somewhat less optimism about home prices this year. And also with us, Avery Shenfeld, chief economist at the Canadian Imperial Bank of Canada. According to data compiled by Bloomberg, he's one of the most accurate predictors of the economy. We call him a Bloomberg best. Gentlemen, welcome to Bloomberg News. Thank you so much for joining us today.
Thank you.
Thanks for having me.
Terry, let's start with you. That housing number that came out to you today, were you surprised?
I think what was most surprising about the number, Mark, was the shift in the number of our expert panelists who are now calling for negative growth in U.S. home prices this year. Just last month, the inaugural survey showed that a minority of the panelists were expecting negative growth for 2010, and that 40% minority swung to a 56% majority of our 106 expert panelists this month.
Avery, might I ask you then, was this just the question of the housing data getting swept up and just a bad month overall for the economy?
Well, it was a question in part of people rushed to close sales the month before where you got qualified for a big tax credit. But even if we put the 2 months together, you're looking at extremely low numbers for housing sales. And I think, all the hallmarks here of a further decline in prices ahead. Prices did come up a little bit during the period where you had that tax credit. I think all bets are off now. I think that we've been saying for some time that there's so many houses still being foreclosed on, so many of these distressed properties coming on the market. I think that we're going to lose everything we gained over the previous year in terms of house price recovery.
Terry, might I ask you, how significant was that tax credit, that homebuyer tax credit? Because it is set to expire at the end of this month, and there is some talk that the Senate Majority Leader Harry Reid might try to make sure that tax break gets extended.
Well, my understanding of that potential extension is really nothing more than some administrivia. In other words, enabling some of those homeowners who have still not closed and are unlikely to close by the end of June some extra time, in essence, to get their paperwork through. So I don't see that having any lasting impact unless, of course, there's more fundamental changes to the proposed extension.
Avery, I'm curious, now that the tax situation, the tax break situation seems to be done, whether the closing date is going to change or not, will we see more of a stabilization where you won't have these big drops on a percentage basis month to month now that that's over with?
Well, there may still be some flipping back and forth here because, as was mentioned, there may be some houses that still qualify in terms of trying to rush the closing date. So some of the series on home sales reflect when the sale is transacted. Some reflect when it's closed. But I think by and large, the best you can say about housing is that it's probably likely to stabilize in terms of volumes of activity at a pretty low level. Don't be surprised if at some point later this year we actually get the transactions going up again. There's so many houses being seized by banks, by the lending agencies, being forced into sale, that you're going to get some transactions. But I think the issue is at what price. And I think we're going to see some fairly depressed prices as we continue to clear out the mess left behind from the subprime crisis.
Terry, might I ask you about concerns that some analysts have expressed to us of a double dip in the housing market? Is that something that's on the horizon because of the numbers that we're seeing now?
Well, it's certainly a distinct possibility, and I would add that although the consensus forecast of our expert panel calls for some moderate pain for the remainder of this year, thereafter, the consensus is that the market will recover, albeit quite slowly. We're getting mixed messages, but the spread among our survey panelists is actually quite wide. And frankly, that's a risk that we have to manage much better on a going forward basis.
Avery,
this is a 17.
Right. I'm sorry. Please finish your thought.
This is a $17 trillion asset class. And when you put that in the context of other major asset classes, for example, the stock market, which is only about $15 trillion, it really underscores the importance of managing this risk going forward. and perhaps thinking about new risk management institutions for housing, which our firm is actively working on.
So what would that kind of institution look like, just briefly?
Briefly, new markets that create liquid financial instruments that deliver price transparency to housing, that enable those who are most exposed to home price risk to lay it off to investors better able to shoulder that risk. There needs to be more capital and demand drawn to the U.S. housing market.
And Avery, just in 10 seconds, do you think that would be a good idea?
Well, it might help, but I don't think it's going to clean up the problem here. With millions of houses still to come on the market from foreclosures, from distressed sales, I don't think even financial security of the type that's being mentioned is going to do much for that. So that might be avoiding the next crisis down the road, not going to help homeowners today.
Avery Shenfeld, chief economist at the Canadian Imperial Bank of Canada. Also Terry Loebs, head property data analytics group at Macromarkets, talking housing. Gentlemen, thanks so much for your perspective. We appreciate it. Julie?